How would you like to get the insider information and tips from hundreds of experienced and trusted home mortgage lenders for free, with no one giving you the hard sell, no one spamming you, just regular straight information, no strings attached? Rad, because that's what you're going to get here today. I asked 250 of the best first-time home buyer lenders from all over the country this question: what things do you wish that you could have done with your first-time home buyer clients a couple months, 6 months, or a year before they asked you to get a pre-approval? What would have really set them up for the most success? Let's hear the answers.
How to Buy a Home educates, protects, and connects first-time home buyers to qualified vetted realtors in their area. Whether you're looking for DIY information or step-by-step guidance, How to Buy a Home is the #1 resource for first-time home buyers.
What is up, my homies? It's still me, David Sidoni, rocking the scene since 2019, dropping knowledge nuggets for first-time homebuyers who deserve $10 million service, even if they're only buying a $200,000 starter home. Because you know what? 200 grand is still a buttload of money, and buying anything that expensive needs a plan. So what do the top experts in first-time home buying lending wish that their clients had talked to them about? Wish that they could have done earlier in the pre-preparation phase so that those buyers could end up being the most badass buyers on the block? I'm going to give you all the best tips and tools that were recommended to me from lenders from Hawaii to Maine. We're going to get into the what to do and the how to do it. But first, let me quickly go over the why. Why pre-planning with a realtor and a lender team is so important for your success. I know I tell you all the time that buying a home isn't one size fits all. Well, let me tell you this. Getting a home loan is definitely not one size fits all. I know there's a lot of information out there, and I know that with Google or AI or ChatGPT or anything, that you can find a lot of information. I'm not going to tell you that you can't find some of the basics on how home loans work. Anyone telling you that is lame and out of touch. I'm not going to try to trick you into calling me with some sneaky, skeezy sales pitch to try to say, hey, look, home loans are difficult. Google's totally wrong. You got to talk to me if you want to get the best deal. I'm not going to drop those cheesy sales techniques, but unfortunately, they are used by so many sketchy or sometimes desperate lender and realtors out there that you think, those guys are lying. Well, when I started in this business, I learned real quickly, this is almost 20 years ago, I totally get it. You can do all the research on your own and do a lot of work before you ever decide to reach out and hire the professionals to help you close the deal. But what I found out very, very early in my career was you really shouldn't. So straight up, homies, no, you do not have to do all the planning on your own. There is a better way, and it doesn't cost you out of your pocket to get that guidance. Google, ChatGPT, or any how-to workshops or webinars for first-time home buyers, they can't tailor advice based on any buyer's individual custom information and the nuances that a professional can help you structure with you, help you create a loan. That can be the difference between, well, a cookie-cutter loan that, sure, it's possible. You can do that with someone. But is that truly your best option? Sure, you could take a look at your credit, your debt, and your savings and your income that you currently have, and you can get a loan approval. A professional team that has your best interest at heart is going to help you optimize all of those things to put you in the best position for the best outcome, not just give you an approval by punching in the numbers. Without all of your personal details, and I mean everything. If you're like sketchy about that and you want the really best deal possible, I love you, get over it. You're going to have to give them everything. We're talking about all your financial stuff. And then if they're really going to help guide you, we're going to be talking about your goals, the details of your life. Not to mention even looking at the way you personally handle money. What is your own personal relationship with money, financing, and budgeting? All of those answers are going to be so much more, or all of the things that you get when you give someone that information will give you answers that won't be the one size fits all. There. How's that for a definitive statement? Now, here's just one example of something that you cannot Google. I was talking to my unicorn lender, Kelly Court, who was on episodes 339 and 340. If you haven't listened to those, like straight up, stop listening to this episode and listen to that episode, those two episodes first. She told me about the scenario that she just recently had. She had a recent first-time home buyer who had a good amount of money for the down payment. But when she dug into it with them, she realized that they also had a $1,350 car payment, $1,350 for their car every single month. And these buyers were good. They did all their research. And when they came to her, they said, you know what, Kelly, look, here's the deal. We want the lowest monthly payment for our loan. So we've got this big chunk of money. We want to use it all for the down payment. And of course, that makes sense, right? Good for them. You know, blessings to them. They've got a big chunk for a down payment. So it makes sense for them to use it all, right? To get that lower payment. Okay, well, Kelly ran the numbers with them. And she showed them that if they actually put the $60,000 towards paying off the car completely, that would eliminate the $1,350 debt payment that they have each month. Even with the lower down payment, that would mean $60,000 less that they were putting down and $60,000 more of a home loan. When you run the whole numbers, or I shouldn't say you, when she ran the whole numbers, their net monthly outflow would be less than if they put the $60,000 towards the down payment of the home. Now, that is not something you can Google or not even something AI could figure out, because you have to have all the variables in place. And then you need to know where to put each one and how things work. And you have to understand the creative options. And it takes someone caring enough to look at everything about you to show you all the options that are available to you. And that's just one example. I'll get more into the why at the end of the episode, because I want to get to the actual what you can do and how you can do it, since that's going to give you guys the confidence to see the clarity of this strategy. The strategy of working with a real estate support team instead of flying solo and then calling them when you think you're ready. Oh, wait a minute. Before I get to what and how, I have to give you guys the who. Who needs this information? Well, the short answer is everybody who wants to get the best deal on their home loan, because that's going to be the biggest financial transaction of their life. And I mean everybody. This includes paycheck to paycheck renters who are doing all right and are saving money every month. People living with family because they're saving up money and maybe they're paying no rent. This is for self-employed people who write off everything. For college kids, yeah, you can get a home loan even before you have a job while you're in college. More on that later. This is for blended families living with parents or grandparents, for entrepreneurs, for small business owners, definitely for those people. This is for 20 and 30 somethings who think that this new economy right now means that it's impossible to buy a home. I got news for you. It's not. This is for graduate students, for residents, for postdocs who don't know where they're going to end up or where they're going to be working when they complete their education and their residencies. This is for married, unmarried people, divorced, people who are never going to get married. This is for people serving in the military. And in fact, for anybody that moves around a lot, we've got a lot of traveling nurses that we help here at the podcast. This is for gig economy workers or freelancers, Uber drivers, creatives, anyone who needs some professional tips on how to make their income look better on paper. This is for immigrant families, for first-generation buyers, for high earners, but maybe people who are unfamiliar with the United States mortgage system. And you know, this is even for people in credit rebuilding mode. So you get the idea. Pretty much everyone who wants to buy their first home can benefit so immensely from early guided planning that it's a freaking crime that the real estate industry just ignores this part of the process and turned me in to the angry man on the microphone that I am. I'm not that angry. I'm really stoked to help you guys. Okay, speaking of help, what and how? This is what you came for. Let's get into it. I asked the best of the best of the best of the first-time homebuyer lenders this question. What things do you wish you could have done with your first-time homebuyer clients a couple months, 6 months, or a year before they asked for a pre-approval? What would really have set them up for the most success? Here's some of the answers I got. This first one's kind of funny, and I put it right up top because it made me laugh. The internet is not going to ask you about your future financial goals and help you understand how buying a home fits within your entire picture. It's just going to tell you, yes, you can buy a home. No, you can't. Another answer was getting a Mortgage Pro consultation early is going to give you tips and tricks that you can't find online, helping to line you up specifically for the banks reviewing your loan application. I know, gang, using this what and how is going to save you tens of thousands of dollars. This is why you don't just shop around for an interest rate. You should be shopping for the lender, the person who can give you the best service, the best creativity, someone who's going to share knowledge with you, plus a willingness to help you plan way ahead of time to get the best approval when it's right for you, not just someone who's trying to give you the best interest rate on the day that you call them for an approval. Another one of my favorite answers, time is your secret weapon. That's crazy. If you ask lenders, hey, what's the biggest thing you do? Should people put their money over here? Should they file their taxes this way? Nope. This was what this lender said. Time is your secret weapon. With enough runway, we can fix credit scores, we can reshape financial habits, and we can reposition assets. That's a huge advantage, especially in the competitive market we're in right now. That's where proactive buyers win. Now, remember, this information is coming from lenders. I'm not here selling you squadoosh. So this advice is directly from the top lenders all across the country. So you can take it and do with it what you want. I'm not going to make a dime off of it. The point is just to give you the most education possible. The next piece says early guidance doesn't just help you get pre-approved. It helps you get more money. It helps you get a higher price for your loan approval, and it helps you get better terms and definitely creates less stress for you in the buying experience. And I got this answer. A lot of times we find out that buyers can get into a home far sooner than they think. Their goal numbers, they might be way off. Maybe you could have a ton of different options so that you could do this a lot sooner than you think. And then someone said this, prepping early doesn't cost a dime, but waiting too long could cost you thousands. And this one was really interesting. Every dollar and document tells a story, so start writing yours early. Ooh, that'll make more sense as we go along. All right, here comes a whole bunch of whats and hows that are going to make your brain rattle for a little bit. I don't have time to explain each and every one of them in detail, so if you want more info, I'll have some deeper insight episodes in the show notes, or you can always go to howtobuyahome.com, hit the Ask David button, and just ask me. I answer them all. So here it comes, straight from the lenders who do this every single day with first-time home buyers. This is going to be a lot, so buckle up, gang. Okay, your loan approval is made up of three things. The better you can make them, that's the what, well, the higher your loan approval. Here's the three things. Credit score, we know that, right? The higher your credit score, the better. 2, income, the ability to document the buyer's income per the underwriting guidelines is key. Each income type requires different documentation, but the income needs to be reliable and likely to continue. Sometimes a 2-year history of income or employment history can be preferred, but it's not always needed. More on that in a little bit. And the third thing are assets. Assets for a down payment and closing costs have to be sourced. That's a word you're going to hear when you get into this, sourcing your funds. Some people call it seasoning your funds. It's not putting salt and pepper on it. It's seasoning it in an account for a long time. The money needs a paper trail. It can't just appear out of nowhere. A bunch of lenders told me that they can't approve people who come to them the weekend that they find an open house that they want to buy because some of their money, whether it was a gift from someone or cash out of some fund that they had pulled out and put in their bank account, well, those funds were not documented correctly, and then they couldn't get an approval, and then they can't buy the home. A bunch of them told me that they wish that more people came to them a year out so they could help them understand how to properly document and season your funds. The minimum, they say, is 60 days out. So if you're new to this whole game, documenting your funds, having them sourced and seasoned, That's a gigantic part. Just because you have all the money in the account doesn't mean you're going to get a loan approval that day. The things have to have come in the right way. They also told me that you want to avoid cash deposits until you talk to your lender, because all of those need to be documented correctly. And in fact, another lender told me that anything that is transferred into your account, it needs to be documented. Anything from anyone and anywhere. Many of them said that the loan approvals are often killed because money was moved incorrectly before they called them. Just by moving money around and not getting it done the right way, it can actually kill your deal. And that's because there's a very specific way that the banks who are going to lend you the money, that they want to see the money put in your account. All right, the first thing they said, the credit, the income, and the assets. Well, credit. That's super easy if you're a homie. Everything you need is in episode 304. And that episode is actually going to give you some other episodes that go deep into everything about credit score, not just how to improve it, but how to understand what scores you need, what's going to work best for you and why. And yes, even if your credit score is 0, way back in episode 182, we had an interview with a buyer who had a 0 credit score. He used the tips and the tools that we gave him for a few months, and then he ended up buying a home. Okay, another tip from them. What do they wish you had done? Keep your bank statements clean. No overdrafts, no large unexplained transfers. All that stuff are red flags that the underwriters, those are the people who approve your loan as it goes up the ladder, those are the things underwriters don't like. Another tip was making sure that you set up the separate savings accounts for each distinct goal that you have, like your vacation, your emergencies, and of course, your home purchase. And homies, you know what I'm going to say, automate those deposits. Automate. The next thing they said was, I wish that borrowers, sorry, homies, that's what lenders call you, borrowers. I know you think that you're a first-time home buyer, but the lenders and the banks, they call you a borrower. And you know what? Sometimes I tell my people, it's really good to remember that. Think of yourself as a borrower. It helps for you to adjust everything. I mean, look at it this way. Would you loan $500,000 to someone who asked to borrow money from you if they could not provide to you the documentation to show that they could pay you back? Or even worse, if they bitched and moaned every time you asked them for the proper documentation? So keep it in mind, you are a borrower to these institutions. So this lender said that he wished that the borrowers had a better understanding going into the transaction of how the debt to income ratio is calculated and how it works. Here's what it is. Debt to income ratio is the percentage that minimal monthly payments are in relation to your total monthly income. That's your debt to income ratio, also called DTI. So if you make $4,000 a month and then you go out and buy a car that has $1,000 minimum payment every single month, you're eating up 25% of your debt to income ratio before you ever even get started trying to get a loan approval. Oh, and speaking of cars, this next one's big. Avoid big financial changes. Don't buy a brand new car. Don't change jobs. And don't co-sign on any other loans when you're getting ready to buy a home. I've had dozens of lenders tell me that they have lost countless deals, their words, not mine, because the uninformed first-time home buyer, they bought a new car with payments that were so high they completely jacked up their DTI. Debt to income ratio, gone. And I saw this from a bunch of lenders. They said that they were actually astonished when they saw how giant car payments were for the young people who came to them. Now, they're saying it was giant in relation to their monthly income. So yeah, you out there in the pimped out late model ride with a $1,200 payment, but you're also happen to be living in a crappy 2-bedroom apartment, yet they're talking to you. Love you, homies, but maybe it's time to adult a little bit. Or, fine, do what you want. You be you. Just chill with a dope car and a weak-ass crib. The next thing they wish that you understood was understanding the terms of breaking your rental lease. They might be able to negotiate seller concessions to offset that expense. So if you're looking at a rental lease as a calendar date for when you think you can do this, don't let that be a stopping point for you. Don't let that stop you from starting your plan. You want more information about timing your lease with the purchase of a home? That's in episode 246. Here's a couple basics they gave. Don't open or close any credit cards, but do continue to pay all your bills on time. Now, this next what and how, this is a huge one. I got so much information from the lenders on this particular topic that it could have been an entire podcast. Self-employed buyers or entrepreneurs or small business owners, 1099 folks. Too many of them file their taxes showing super low income because they're writing off everything under the sun so that they can get as much money as they can during the year to fund their business or their life. Well, the deal with buying a home is banks need to see income. Like, this hits home for me because I can't tell you how many times I personally have seen this particular problem stop people from being eligible to buy a home, even though they could totally afford a high monthly payment. Doesn't matter because the banks aren't going to approve them for a loan because they haven't shown that they can afford it on paper on their tax returns. So if you have a bitchin' accountant that gets you a ton of cash back and you think that they're super rad for getting you a fatty tax refund, you have to ask them, did you tell them, hey, you know what? I might want to buy a home next year because that tax return should have been done completely differently and it has just totally sunk your chances to buy a home. So the advice is this. File your taxes with a mortgage plan in mind, not just your tax savings. Now, how do you do that? Well, the how is you have to have a conversation with a home mortgage pro, not just your tax person or your financial advisor, sometimes as many as 2 years in advance. Because for a lot of self-employed people, they need to see 2 years of your tax returns in order for you to get a loan approval. So a professional mortgage pro can help you understand how Fannie and Freddie, the big mortgage entities that lots of first-time homebuyers use, like 70% of them, it's going to show you how to calculate self-employed income so that you can get approved for the loan. Every single one of them told me they wished that buyers had reached out to them sooner so they could coach them on how to talk to their tax professional so that you could show on your return to the IRS adequate income that you could also show to the bank. This really bums me out because there are a lot of accountants, people out there that are supposed to be helping you with your money that overlook the depreciation factor. It's a great way to increase your income, but without paying more in taxes. This is the kind of stuff that you need to do 12 to 24 months before you think you're ready to buy a home. I've seen this so many times in my career, and I'm just a realtor. Imagine how many times the lenders see this. And the ones who responded to me with this question said that this is a huge knowledge hole, that the education and the preparation for first-time home buyers and having somebody who's willing to help them that early, it's just not readily available. So just like I wish they told you how to figure out how to buy a home when you were in high school and college, someone should have been telling them about this part of filing your taxes way earlier in their life, but no one's doing it. And it sucks, but homies, this isn't your fault. There's no big lending or real estate company that wants you to come to them and say, hey, I'm going to buy a house in 2 years. You know why? Because they don't get paid until you close on the home. So they just ignore you and let you flounder. So if you are self-employed or you own a business or you're a 1099 employee, this right here is the biggest. What do I do and how do I do it? What? Get a long-term tax plan. Something that shows your income that banks are going to allow you to get a loan for the approval that you want for the type of house that you want to buy. So how do you do that? Well, you get your unicorn team early and they're going to work for you for nothing for 2 years because they don't get paid until you close because they know how important this is to you and your home buying process. And they're super stoked to do it with no upfront fees or consultation holding fees, no retainers. They know when you're in and they show you all of this, that there's no way that any online lender or anyone else is going to give you that kind of information. They understand the value they can bring to you. Okay, and the next thing they told me, this was something that is for everybody, not just your 1099s. So you W4, W2 nerds out there, this one's for you too. They said they wish that everyone had looked more closely at their 401k or looked at moving their investment money. They said this because they realize how difficult and unaffordable it is to buy a home right now, but they know the long-term math of a rent replacement strategy is the best thing mathematically in the long term. Not a philosophy, not a theory, not a gamble on just straight up math. Because seeing the home as an investment diversification and a forced savings account, that has math that comes with it. So that's something they wish people had done more of. And by the way, speaking of 401k, many of them mentioned to me how shocked they were that borrowers didn't realize or forgot some 401ks that didn't get rolled over. So make sure you check that out too. Okay, the next what and how. Don't pay off all your credit cards. Don't do a credit card consolidation loan. I talk about that a lot in the credit episodes, but in today's world, buying a home with no debt is such a farce. Cash is king. That was their words. You got to think about it this way. The minimum monthly payment might be very little, and your cash is going to go so much further in the equation of you buying a home. So if you pay everything off, you might think, oh, look, I'm in great shape. But really, don't pay anything off until you have a mortgage pro look at your entire equation. I know it feels like when you pay everything off, you're doing the right thing and the smart thing and the responsible thing, but there's math that shows you that that cash can possibly be utilized a better way. Okay, next, here's a what I told you about before I teased it. College kids can get approved while in school with a job offer. This one is something that blows everybody away when I tell them. You don't have to have a job to get a loan approval. There are certain college students that don't even have to have a job that can get approved for a loan, come right out of graduation and buy a house. This is a what and how that so few people ever research. It really bums me out. So many people waste their first few years out of school giving all that money to the landlord, not realizing they could have bought a nice, modest home with their first job. And you're like, oh, Sidoni, that goes against everything I read. I know it does. But here's a fact for you. For certain borrowers, first-time homebuyers, being in school counts as employment history. Let that one sink in. The next what or how for you. Confirming how you get paid for your job. That could drastically change your qualifying power. That's the amount of loan that you could get. So like things like if you're paid hourly or salary, or if you earn bonuses or a commission, or if you get tips. Well, this could affect the type of position that maybe you're thinking about taking with your job, but not if you haven't talked to one to find out what's the best one for you. And then we have even more ways that banks look at your salary in regard to your loan qualification. So again, the what that you do, well, that depends on you having the correct guidance on how these mortgage guidelines work, not just with your hourly or salary or bonuses or commission or your tips, but also with these things: overtime, part-time, your sign-on bonuses, your annual bonuses, your per diem, your RSUs or stock benefits, and not to mention the difference between contract work or some self-employment stuff that you have. The lenders told me that in many cases, people have no idea how these types of income are all treated differently from the perspective of qualifying for a home mortgage. And then they often make these life decisions because figuring out how you're going to get your income is kind of an important step. And so people take the one they think is going to be the best for them. But when it comes to buying a home, it might be taking a step backwards for a year or even two. So let me say that again. When it comes to the filing of your taxes or choosing how you were paid at your job with all the things that I just mentioned, the best lenders in the country told me this. In many cases, people have no idea how these are treated from the perspective of qualifying for a mortgage, and they often make decisions that can set them back 1 or 2 years. They wildly misjudge because they're doing what feels like a rational and reasonable decision on their taxes or their salary, but it could have actually tanked their ability to buy a home. You know what, homies? I can tell you this. This is the biggest bummer about this business. And it happens to me, well, nowadays it happens once a week. People with 800 credit scores, good jobs, good income opportunities, they do a lot of work on their own, making all these decisions about their tax filings and how their income is going to be given to them by their companies or their own individual self-employed stuff. And they're making smart decisions, logical and rational choices. And they assume that they're going to be rewarded next year when they reach out to a mortgage professional, and then they find out they can't buy a home. And I know this happens all the time, and it really does. It crushes my soul. And I get it, because they're sitting there going, wait a minute, I did everything right. I know. I'm telling you, I've had this conversation too many times. Originally, I had it for 13 years when I was doing real estate. And then in 2019, I started the podcast. And so I was doing it with my local people here, but then also from thousands of people all over the country. And it sucks because I don't want to have to hear their disappointment, especially because what they're doing is logical, it's practical, it's reasonable. But home mortgages are looked at differently than how you think doing all the right things with your finances should be done. It's different than how many tax professionals or financial pro will advise you. That's because a tax professional's job is to get you the most money back. And a financial pro's job is to make your money earn the most. But what if that's not the best thing for buying a home? And I can tell you, firsthand experience, lots of times it's not. So I know it can get crazy, but when you're looking at the big picture of your life, if you're trying to figure out what job, promotion, or income decision is right for you, and you're thinking about buying a home sometime soon, you shouldn't talk to your therapist or your tax professional or your financial advisor. You should talk to a mortgage pro to make sure that these decisions line up with the biggest financial thing that you want to do in your life. This episode, I'm telling you, share this with all of your smart friends. Everyone you know out there who's grinding away and doing what they think is best, but they don't want to bother a realtor or a lender yet. I can tell you this. I talk to all these people. Bother them. They want to be bothered. Anyone out there who is a unicorn, they are so happy to set you up early because they know no matter how many of you share this out there, that they're still going to get that weekly phone call that I'm getting right now, where someone is disappointed, where someone came in thinking they did everything right, and now they can't get approved for a home loan. We know those are coming. So when people come in, what you think is too early, in quotes, it's a freaking blessing to us, and we get stoked. Oh, and there's one more thing that a lot of them mention a lot. Uber and Lyft drivers. This is a big one. Lots of people out there do this side hustle, especially when they're trying to save money towards the down payment and the closing costs. But what ends up happening is you end up writing off too much in the expenses, and then it leaves no actual income that you can have documented correctly, and so it doesn't go towards your qualifying. So getting the job isn't a bad thing. It's totally rad to get any kind of second job, side hustle to save up that money. But here's the little trick. You can use something called depreciation as a tax deduction, and it can help that income qualify for you. Lenders then, if it's written up correctly when you're using a tax professional, they can add back depreciation when calculating self-employment income, but they cannot add back other deductions. Confusing? Fine, I get it. That's why you talk to someone else. And that's why you also talk this over with a mortgage professional, not just a tax pro. I'm not a tax pro, so me telling you that you can absolutely do this and do depreciation, I don't know. But what you should do, if you've got a side hustle, is talk to a tax professional and tell them, hey, here's the deal. I talked to my mortgage lender. I want to show as much as I can for the purpose of buying a home. I know I'm not going to get a big refund. That's cool. Just make it look like I make as much as I can. All right, the next thing that they wish that people had done a little bit earlier was understand documentation. This is like a crazy thing that happens with loans. You need to document everything that comes in. Like, for instance, if you make a loan to another person, you have to document getting repaid so that can actually be counted towards the down payment. And I've been told, don't do any of that in Venmo. It's got to be documented differently. So talk to them. Another thing that needs to be documented is gift strategies. I know a lot of people out there, God bless you, if you got the privilege and someone's going to give you some money, this has to be done the right way. You need to prepare the family members who want to help with the down payment. Many people don't know all the rules around this. And it's not just who's eligible to give you a gift. It's how it has to be documented. And in many cases, it has to be documented before the funds are transferred. So the lenders told me they wish they could have had the conversation earlier with the borrowers, wish they'd come to them before they got the gift from mom and dad and it was already sitting in their bank account. Because in some cases, they ended up not being able to have to use it, or they had to wait 3 months or 6 months for it to season correctly. And a lot of them gave me this advice. If you're getting a gift, to actually ask to get it done 6 months, a year ahead of time, done correctly with the proper documentation. But then the lenders told me they'd rather have that conversation way ahead of time rather than as you get close, a couple months from the application process. Because if you have a gift mapped out well beforehand, it gives both parties peace of mind, the money's there, and it also becomes an integral part of your planning process. And you figure out, with this, we can now add to that with more savings as it comes in, and you can get really creative and get a better rate. And the people who are giving the money, they want you to get the best deal that you can. And the thing about having that money in there early is that you working those plans, you're showing the gifter that you're trying to maximize their generosity as wisely as possible to make their gift dollars go as far as they can in the most efficient way possible. Okay, next, this is something that I got told by a few people. Mattress money, cash that's just laying around, it cannot be used for the purchase of the home. So you need to get that into a bank account way ahead of time before you start the process of getting pre-approved for a mortgage. A lot of them told me that when it comes to any large sums of money, even if it's in a bank account, don't move it around for the months leading up to the pre-approval. They said they can look at your most recent 60 days of asset statements. That's how much money you've got. And if suddenly there's $15,000 cash deposited in there, if they can't verify the source of it, or even if they can, it might still not be allowed. So they can't utilize that money in your home purchase. And many of them said, hey, we get it. Maybe people have money in crypto. If you got money in crypto or someplace else funky that is new to the world, you need to talk to someone like 6 months minimum ahead of time. You need to be very, very careful with how that money is moved in order for it to count for anything that you want to do with the home purchase. One of them told me, hey, with crypto, you got to dot all your I's and cross all your T's and do it early. Now, here's a few more random what's and how's. If a client can't qualify on their own after their initial review, is there someone out there that might be willing to be what's called a non-occupying co-borrower? I think of like someone co-signing your lease for a car, all right? Now, if that's something that maybe you have to do, having that conversation up front and early helps immensely. Another response I got was, I wish more would have done a practice payment while they were saving to buy a home. Gee, someone should have done a podcast about that. Oh, wait, I did each of the last 2 years. Homies, that's episode 309 is the most recent one that talks about doing a practice mortgage payment. Some of the other what's that can be very helpful: down payment assistance. Understand that there are loan programs everywhere and that they're different state to state, county to county, and sometimes city to city. So explore them all. And I'm going to tell you this, even if you don't think you need it, I can't tell you how many people with 800 credit score and a good down payment find out that they can still get some kind of assistance. It's awesome. And here's an even more awesome thing. You can use more than one down payment assistance program. It's what the lenders call stacking. Okay, another tip, and I know this sounds silly and cliche. That's a direct quote from a lender. But the more money you have on hand in liquid form, the more power you have as a buyer, and not mattress money. Damn, they love that term. They said cash is king. And it has to be in a bank so they can see it. And speaking of cash, one of the big what to do and how to do it tips is about reviewing your debt and your savings and looking at them together as a balance. Lenders told me it's not always pay everything off. It's about strategic positioning for a better debt to income ratio and maintaining maximum liquidity. So again, cash is king, maximum liquidity. Because if you have that, you can always pay off the debts as you get closer and closer, but you can't unpay the debts. Once the cash is gone, it's gone. I know it sounds counterintuitive to a lot of you, but I can tell you this, guys. Dave Ramsey is killing would-be first-time homebuyers by telling you to be debt-free first. All right, old man, I'm on. You are on call with me, buddy. I'm telling you, if you keep telling people that, I mean, you know what, dude? You try being 25 years old, paying $3,000 a month for a small 2-bedroom apartment and trying to pay off all of your debt. Now, how does that make sense? Well, I've explained it in many other episodes. It's big math, people. Welcome to 2025. It ain't sexy, but a rent replacement strategy will make you more money over the next 5 years than you trying to get debt-free and buy a home. One lender said it this way. Before you even think about buying a home, you got to get a plan like yesterday. Why? Because without one, you could be tossing your money in the wrong direction. You could be paying off debt when you should be saving, or you could be saving when you should be clearing out that credit card. But you don't know unless you have a solid plan. One built with a lender who runs your actual numbers and helps you make the smart moves that get you to the closing table faster and with fewer headaches. You'll even put yourself in a situation to dodge mistakes that, when you've done everything correctly, are totally avoidable. They went on to say, talking to a lender 6 to 12 months out might just blow your mind. You might be way closer than you think. Knowing your income, your assets, and your credit up front doesn't just give you confidence, it puts you in control. And here's a few more answers for you homies when I ask the people who are in the trenches every day with people just like you. Remember the question. I asked them, what do you wish you could have done with your first-time homebuyer clients a couple months, 6 months, or a year before they're asked for a pre-approval? What would really have set them up for the most success? Here's some other answers. Understanding what an interest rate really is and how to use it as a tool for your finances tailored to your individual custom need. That's not always the lowest rate. All right, I'm butting in here, homies. That's a big one. Because the deal is it costs you nothing to talk to a unicorn, to get them to break it down for you and show you how this works. I can't do that here because buying a home loan is not one size fits all. So each of you is going to have a different answer to that question. And you can ask someone and get the information for free. You're not buying a home next week. You're asking them for help. And they can show you how an interest rate is not the end all be all to the entire equation. So aren't you curious to hear what your answer is? Okay, they also answered with these things. They said, work with a mortgage professional, not a bank employee. That's a big one. This one I thought was kind of interesting. Be realistic as to what you can buy as a first-time home buyer. It's not the same as your parents' third home. Ooh, I have a feeling I know why that one came up. Okay, the next one. The internet isn't going to pay for the home, so keep that in mind with the information to provide you. That's funny, but hey, what does that mean, lender? You're going to pay for the home? No, what it does mean is that the lender, their business grows only if you are satisfied with what happened during your home buying process. So if they screw you over, you're not sending them any more business, right? It makes sense. And then here's another one. They said it's not the buyer's job to come into the process knowing all of the nuances with everything about buying a home. An early discovery call allows the lender to provide guidance to set the buyer up for success in all areas. It's about shopping who can help you build the best plan, not doing it on your own and then shopping rates the day that you want to write an offer. You do that, and you miss out on so many opportunities that you could create to save you so much more. One of them did say this. They said, getting the level of service that they need to find all these creative options, it's significantly more rare these days. A lender that takes the time to meet with the buyers and prepare them with tools and strategies is a huge differentiator and creates a much smoother buying process. Okay, homies, let me wrap it up with this. First, I'm so proud of this episode, mostly because when I asked the Unicorn Network to provide me all this information from their individual lenders that I never work with, I just asked them, hey, talk to the best people and let me hear the best stuff. They came back with such gold to help you first-time home buyers. I'm stoked about it. So go ahead, listen to this one a few times, share it with friends, and for God's sakes, 72% of the thousands of first-time home buyers that have come to How to Buy a Home since 2019, who tell us that they're a year or 18 months out before they think they're going to be ready, 72% of them end up under contract in 3.2 months. So stop telling yourself that you're not ready and that you need to listen to 20 more episodes before you reach out and start your plan. You know what? Here's the deal. You can reach out and get a team, and maybe for the first month or two, you're doing nothing. Super teeny little $25 into a savings account and working on your credit score. And that's it. And then fine, you can be started with a guided plan, and then you can listen to 20 more episodes or 100 or 200. I don't care. Listen to all 346. Because when you have that guide, you can send an email or a text. Hey, I was thinking about this thing at my job. Hey, I'm getting ready to do my taxes. Hey, I was thinking about moving some money from this account to that account. And then you get the right answer. And I know you're going to be getting the correct advice early to set you up for success. And more importantly, you don't end up being one of the weekly phone calls that bums me out. Someone who didn't do the right documentation or the tax filing or the income structure or any of the other things that I talked about in this episode. And now they can't buy a home, and it just breaks my heart. Remember this, homies. Time in buying a home is your secret weapon. With enough runway, a Unicorn team can fix credit, reshape financial habits, and reposition assets to get you the best loan approval possible. And that is a huge advantage, especially in a competitive market. They said it, not me. Proactive buyers win. Unicorn teams, they are masters at crafting the best overall financial plan for you. And that does so much more than just giving you a loan approval. So yeah, if you do this right and you use time and the runway, I'm pretty damn positive you can do this.
Looking for more DIY education or your own personal step-by-step guidance through the home buying journey? Since 2019, How to Buy a Home has been the #1 resource for first-time home buyers. So visit howtobuyaHome.com to get started.